Hey, it's Doug McIntyre. I'm the editor-in-chief at 24/7 Wall Street, and I'm here with our senior market economic stock writer who's been with us for 15 years. He's been the best guy we've had doing all this. We're going to talk about dividends. In this age where everybody says, well, let's get some Tesla, let's get some Apple, a lot of times dividend stocks get ignored. There are a lot of people who want these more boring stocks that they can get a 3 or 4% yield on than they want like Meta, which might be up 50% one year and then it's down by 2/3 the
Absolutely.
next.
Sure.
So what's sort of the history of dividends? How much do they contribute to somebody's portfolio over a long period of time?
As I think we discussed at one point, there's a statistic for the S&P 500's total return from 1926. And the dividend component with those stocks contributed 32% of the total return. Now, granted, the stocks came in with 68%, but for a passive income stream that typically has zero risk, for the most part, that's a huge addition for overall total return and for people to make money.
Yeah. What would you say to somebody who says, well, I can go to my bank and I can buy a piece of US paper that yields, it's 5% or so now. Why not just walk into your bank and say to my banker, give me that piece of paper?
I think depending on your risk tolerance, for some people, that's probably a good idea. And back in the fall, late fall, the yield on the 10-year and the 30-year was over 5%.
Yeah.
And of course, they will sell that as a risk-free yield, but it is true that we're $34 trillion in debt. So I guess there's somewhat of a possibility that there could be changes in that. But I think for most people, unless they're senior citizens or things of that nature, I think the growth factor with solid dividends is the key for long-term investing success for sure.
Yeah. If you were to look at, say, half a dozen stocks that have high yields that you think are safe, the business is solid, the cash flow is good, and you say that's a high yield, and I would bet that it's solid for 5 years. What would those five companies be?
I think if I had to immediately go to them, as we've discussed, Altria would be one, because even though cigarette smoking has declined here in the United States, it's still big in Europe and especially in Asia. I would say another good stock would be Verizon. And even though both of the carriers had some issues, Verizon had good earnings. They had an increase in customers from their internet access point. And I think that it's a solid company. I think Pfizer, despite the fact that the COVID gravy train for them, for lack of a better term, is probably over for now, it's a good long-term investment. And the stock just got absolutely hammered to the point where the yield was up around the 6% level. And that's a very, very good safe dividend. I think most of the defense stocks, especially then considering it appears like we're going to be fighting more proxy wars. So if you go with Lockheed Martin or a big cap stock like that, you're in pretty solid state of affairs there. And obviously like a McDonald's, someplace where the food business won't go out of fashion, whether the economy is good, bad, or indifferent.
People will say, why does Altria have a 9% yield? And some people would say it's an inducement to buy a sin stock. Do you think there's any truth in that?
It's always had a high yield. And back when smoking was considered not that big of a deal. And I guess they can go down that road and say that. But again, like smoking, nobody forces anybody to buy Altria. And they own a big chunk of Anheuser-Busch InBev. They own 10% of that. And it's been estimated that that portion of the company is worth $10 billion. So
right.
While I guess some people can make that argument, they also sell a lot of the smokeless nicotine products and the pouches, which I'm sure dentists don't like, but it's not all just cigarettes.
There are two terms that people hear, and a lot of people don't know what they mean. So if somebody says to you, dividend kings, what does that mean?
Well, it's a group of stocks, and they have raised their dividends every year for at least 50 years. And that's pretty astonishing. And sometimes the increase in the dividends is a couple of pennies, but they can say they increased it. So that's what the group of stocks that are called the Dividend Kings are. 50 years of raising the dividend every year.
You'll also hear dividend aristocrats. Is that a term for something else, or is it sort of the same thing?
It's very similar. The dividend aristocrats are companies that have raised their dividend at least 25 years, but they must be a member of the S&P 500. That's not the case for the Dividend Kings. So that's the difference between the two.
You get some of these oil trusts, REITs, and 18% yield. You get really crazy numbers. What's the problem with biting on those if you're really interested in saying, I can get a solid yield for 10 years?
Well, a lot of those, Doug, are mortgage REITs like Annaly and other companies like that. And, they trade in mortgage paper. And typically, like Annaly, for instance, it's hung around and its dividend is hung around. But in some of the REITs, they were absolutely destroyed in 22 because as rates were plummeting, they were getting hit hard. And then when rates started, or they were at least being looked at, but when rates started to go back up and accelerated, they were absolutely crushed last year. I think now, at least from the latter point of 23, people started to edge back into some of the quality REITs and MLPs and things of that nature.
If you were an investor, what would your advice be in terms of dividend safety? I'm looking at something, I like the dividend. Are there 2 or 3 things that I should think about if I want to ask, is it sort of permanent?
Yeah, I mean, in many cases, you want to see the free cash flow of a company because that is what is ultimately going to pay or cover that dividend. And companies like AT&T and Verizon, they have huge cash flow simply because they're billing clients every month for their phone service, their wireless service, their internet service, and sometimes other things that they offer. So positive cash flow can be one of the biggest items to look at for investors, and how that dividend is covered in the company's earnings and the total cash flow.
Yeah. Well, look, this may be one of the best dividend educations I've ever seen. So I want to thank you for joining me, and I'll see you again soon.
I look forward to seeing you too, Doug. Thanks.